Let's be honest, most business owners didn't start their business because they love managing money. But if you don't have a clear system for handling your finances, your business will always feel more chaotic than it needs to be. You'll find yourself wondering, can I afford this? Did I save enough for taxes? Why does it feel like I've made money, but my bank account just doesn't show it? Well, this video is going to be your comprehensive guide to fixing that. Because no matter what kind of business you run, whether you're a solo operator or a team of 200, your finances should run on a system, not on memory, not on willpower, not on last-minute logins. And when you get this right, something amazing happens. Your finances start supporting your business instead of slowing it down. Here's a full system to think through as a business owner, especially if you've ever felt like money isn't organized or working in the way that it should. Step one. Step one is about separating your business and personal finances. If you're using the same bank account for everything, it's nearly impossible to get any clarity. And the first step is separating the church and state, as we like to say it. One account for business income and expenses and one for your personal life. Ideally, you're going to have a couple other business accounts set aside for taxes and a few other pieces that we'll get to in the next steps. But even if you just do this one thing of separating the business and the personal, you'll reduce your stress by 50% or more when it comes to financial stress, especially around tax time. Now, step two is about setting up your baseline financial structure. At a minimum, every business owner needs a basic money framework, and that includes a simple budget, right? How much do you need monthly to cover business overhead, personal bills, and savings? You're also going to need your break-even number. What is the minimum dollar amount that you need to bring in each month to stay afloat? Next up is your monthly income rhythm. Are you paying yourself consistently, or are you just pulling money when you feel like it? And I typically like to have a few core business accounts so that I can keep my money separated in the appropriate buckets. Those buckets are operating expense account, a tax account, a profit account, an owner's pay account, so again, we can make sure we're paying ourselves consistently, and a business savings account. Your situation could be different, but having the different accounts with specific goals and functions seriously helps out from an accounting and budgeting purpose, rather than having everything bunched together in one single account. Because without these foundational pieces, it's hard to know what is enough, like what does enough look like, and even harder to plan ahead. Now, step three, it's about building a system to track your cash flow. This doesn't mean you have to become your own bookkeeper, but it does mean you need visibility. That could be hiring a bookkeeper who's going to review your monthly P&Ls, could be using software like QuickBooks or Xero, and it could be keeping a simple spreadsheet to log what comes in and what goes out, maybe a Google Doc. The format doesn't matter. What matters is having a consistent pulse on the money that's flowing through your business and where it's going. Now, step four, that's setting aside money for taxes proactively. As a business owner, you know, I know, one of the most stressful things for us small business owners is getting hit with a huge tax bill that you weren't prepared for. The solution isn't just making more money, though that does help, but it doesn't necessarily solve the problem. It's about setting money aside as you go. Even if you don't have a tool to automate this yet, you need to open up a separate tax savings account and set up a recurring calendar reminder to manually transfer a percentage of each paycheck that you get or deposit. And if you want to take this to the next level, you can use Sequence or a similar tool to make this process automatic. But even a manual habit is better than nothing at all. Step five is about creating a regular money meeting. Whether you're solo or leading a team, you need to set up a recurring time in your calendar every single week or every other week to check in on it. You need to look at your current account balances, your outstanding invoices or bills, your progress towards your saving goals, your budget versus the actual spending, because this rhythm keeps you from making decisions in the dark. And if you have a business partner or a bookkeeper, use the same time to get on the same page. Step six is about automating what you can. Once the core systems are in place, automation becomes your secret weapon. And the automations include recurring transfers for taxes, for savings, and your paycheck. You want payment reminders and invoice follow-ups. You want threshold alerts when cash runs low so you don't overdraft an account. So whether you're using your bank's built-in tools or a software like Sequence to help you automate all of your workflows and finances, your automation turns your systems into routines that run without your daily input. And that's huge because it takes away the need for us to constantly remember what we need to be doing and where we need to be sending money. Now, step seven, that's plan quarterly and check weekly. Because remember, big goals, they need small steps. That's why so many successful business owners set quarterly money priorities. Maybe it's you want to build up your $10,000 reserve fund, or you want to pay off that credit card, or you want to increase your owner's draw to 15%. You want to break these into monthly and weekly checkpoints, and you want to use your regular money meetings to track that progress. Because in step 8, you need to ask for help before it's urgent. Most of us wait until we're in a financial mess before we talk to a pro. Don't do that. That's not a good process. You want to find a bookkeeper who specializes in your type of business. You want to talk to a couple CPAs about your tax strategy once a year minimum. And remember, when it comes to selecting a CPA, it's not just somebody that fills out the paperwork for you. You want somebody who's proactive on the tax strategy because it's an amazing way for you to put more money in your pocket, not just somebody who's going to fill out the paperwork for you. And if you're a fast-growing company looking to get even a fractional CFO. And remember, you don't have to do this alone, and the right help can save you way more than it costs. And here's one last thought. Managing money as a business owner doesn't have to be overwhelming, but it does have to be intentional. You got to start with the basics. Separate those accounts, track the cash flow, and save for taxes. Then build your structure, regular check-ins, simple goals, and smart automations. Whether you use Sequence or any other tool, the goal is the same, a business money system that runs even when you're busy. And once that's in place, you'll feel the difference. More control, less stress, and finally, confidence in your money. Remember, take control of your money today. Go check out Sequence and you can get started in as little as 10 minutes.